You're listening to a CNA podcast.
Hey there, this is Andrea Heng. You are listening to the Money Talks podcast. This is the go-to place for personal finance tips. Now, if you haven't done this already, do hit the subscribe button if you're listening to this on Spotify, Apple Podcasts, or YouTube Music, because that's how you know a new episode drops. And now, my producer, Junaini, is here with me. She's got some quick financial updates. Hit me.
Hello, everybody. Okay, Andrea. Do you do hotels or Airbnb when you travel?
Oh, I do a bit of both, but I do like having that Airbnb experience, kind of like your own house sort of vibe.
It's like you're living there, right?
Yeah, exactly.
Okay, so for travelers coming to Singapore and planning to stay for a couple of nights, staying in an Airbnb is now off the table. So CNA recently reported that there were more than 15 listings offering 2 and 3 night stays in condo units and HDB flats.
Wow.
And now Airbnb has taken action and removed these listings from their website.
Yeah, so I read recently that a lady was fined over 175,000 Sing dollars for illegally renting out 3 units via Airbnb for over 3 years.
Yeah, I saw that too. So basically in Singapore, you can't do short-term rentals. If you've got a private property, you can't rent it out for less than 3 months.
Right.
If we're talking HDB unit, it can't be less than 6 months. And not forgetting, Airbnb doesn't allow hosting in HDB flats.
Exactly. So a very important thing to remember if you are planning to make money out of your property. What's next?
For the first time in over a decade, Vietnam is allowing gold companies to import gold into the country.
Ooh.
This way, Vietnam can bridge the gap between local and international prices.
Right. It's a gold rush of a different kind. Why are they doing this though?
Demand. According to the Vietnam Gold Traders Association, gold purchases are set to rise 10% on a yearly basis to 33 million metric tons during the first half of this year alone.
Wow.
And of course, there are other factors at play here. Interest rates are falling, Vietnam's real estate is going through a bit of a rough patch, and its currency is weak right now against the dollar.
And as we know and have said here on the Money Talks podcast, gold is just another way for people to preserve their wealth, right?
Exactly.
Let's get straight into today's topic. I want to take you back to September 2019. A Swedish teenager went up on stage, she gripped her microphone tight and started speaking in rather morose tones. And then her voice grew louder, more enraged, and before you know it, her passionate speech turned into a scolding of adults about how they've destroyed the planet. If you don't know who I'm talking about, well, that was Greta Thunberg. So climate change, it has become a national priority for many countries, including here in Singapore. We are an island nation and we're vulnerable to the effects of climate change. And those conversations have started to move into the financial world. Today, you would be hard-pressed not to see or hear about such financial instruments. Even more surprising if you weren't confused by the terms being thrown around, terms like ESG and green investments and sustainable finance. Don't worry, I'm just as confused as you are. That's why this episode is meant to help you demystify all of this. And joining me to do that today is Professor Lawrence Loh. He's Director for the Center of Governance and Sustainability at the NUS Business School, National University of Singapore. Professor Loh, it is a pleasure and a privilege to have you on Money Talks. Thank you so much for being here.
Hi, Andrea. Yes, it's really good to be here to talk about all these exciting topics.
So from my rudimentary understanding of this topic, there are 2 key pillars. The first is sustainable or green finance. The second is transition finance. What's the difference between these two? And why can't we just lump everything into just one big green or environment fund?
Maybe to put it simply at the start, sustainability finance or even loans or whatever instruments like bonds is really about the end point, and transition finance is about the journey.
Okay.
But perhaps let me give you an analogy first. In sustainable finance, we finance activities that are already green. And in transition finance, what we are actually trying to do is get those brown activities, industries, products that are not really green yet, and then we use the financial means to encourage them, to steer them towards being green.
Right, so more incentivizing.
Yes, and I think to put it even more starkly, sometimes I feel that sustainable finance is given to those who actually don't need them.
Tell me more.
Because sometimes the criteria that I would say the financial use are so particular, and they really want to make sure that the recipients of such funds are on track or actually green before they could get the funds.
Right.
In the last couple of years, a new category comes out, and this is to help those who actually need the funds to be green.
I understand. So what are some of these green activities you're talking about?
I think there are several categories. One is, of course, say if you look at carbon emission, we are looking at projects that are reducing or removing carbons. Secondly, if you actually have activities that move energy usage from the conventional fossil fuel to something that's more sustainable, such as the wide range of renewable energy, including solar, hydro, wind, geothermal. That's a second big category. Third one, which is investing in the technology that enable you to move towards any of the sustainability outcome.
Right, because there are so many different phases and aspects to it. That's why you can't just have everything in one fund.
Yes, definitely. And I think both types of funds, sustainable as well as transition, serve their purpose, even in different ways.
Okay, it's much clearer to me now. So let's take a step back, Professor. When and why did the financial world decide to merge two seemingly unrelated concepts, right? Investing and the environment. I mean, how did these two come together in the first place?
I think if you look at what we want to achieve as a world, we want to be sustainable, both environmentally and socially. And if things are left to their natural course of action, nobody will move a single bit.
Yeah.
And I think money spins the world. So I think it's putting the money where the mouth is or hit the pocket is something, that people will just respond proactively, not even reactively. So I think finance is fundamentally the best lever for change.
Okay. So let's talk about the instruments
Yeah.
that are involved. So in one's portfolio, on average, you would have investments like insurance plans, you would have ETFs, stocks, bonds, that sort of stuff in any average investor's portfolio. So if we were to use this as a reference, what are the investable products in this area of finance, both green finance and transition finance, for us investors?
I think if you look at sustainable finance now, the key instrument right now are actually bonds.
Okay.
Green bonds is a primary instrument, and this is basically one of the key asset class that really take on green finance precisely because they are already very established standards going on. Having said that, other conventional instruments or entities like equities, which also come together as ETF, are also quite good, except that you are investing in, I would say, more complicated products that are not immediately attached to being green. Unlike if you lend somebody a money or you buy certain instrument that's like a debt, it's very precise. You can exercise precision in terms of getting the outcome that you want.
So I understand that here in Singapore, we have green bonds. These were just introduced. How do these work?
I think what happened is if you look at the traditional bond, it's just a piece of paper. At regular periods or intervals, you get certain returns. And when it matures, you get back the full sum.
Yes.
So the parameters that undergird such an instrument are basically sustainability based.
Right.
So in other words, people put in the call for money and promise to say that our fund, things like carbon reduction or, switching to renewable energies or other activities. So I think there's a certain purpose to such an asset.
I wanted to pick up on what you said earlier that, with the SG green bonds, you're sort of encouraging and sort of channeling some of those funds to companies that make this promise.
Yep.
The word promise there is the one that caught my attention because we often talk about accountability as well. And can I assume then that because bonds tend to be attached to governments, therefore, with the SG green bonds, the Singapore government is therefore accountable or will make sure that these companies are accountable to their green activities?
Yes, there's this category called the SG green bonds. But moving beyond that, I think what they are trying to get at is what companies need to do. And another type that comes out, in fact, very rigorously in the last couple of years is loans rather than bonds.
Okay.
So in other words, the banks will lend money directly to entities and particular companies.
Sure.
And the companies will have certain ways to use the proceeds. Or sometimes there are certain targets attached to such loan.
Like a KPI.
Yes, exactly. KPI, our favorite word these
I
days.
know.
There are KPIs to achieve, for example,
Yeah.
how much carbon emission reduction.
Got it.
And there's a timetable of values you have to abide by.
Right.
And then if you don't meet them, the interest rate might go up. But that again is a problem. Sometimes, when banks give such loans and if they don't meet the target, actually
It benefits
it's
somebody.
counterproductive.
Yeah, exactly. So, yeah, that confuses me a little bit. But maybe because it's such a new area of finance, right? I think everyone's still trying to figure out what to do with it. So, say I am a retail investor and I'm not the first one to consider investing in instruments that focus on green finance or even transition finance, right? So as with any investment, I would want to know my ROI, my return on investment. So what kind of returns are available to me in this area of finance? Do you mean to say that I can invest in a green fund or a transition fund and that's channeled towards slowing climate change. But then what happens to my money after that? Does it grow and I get it back? How does it work?
I think if you look at green finance or you put yourself in the shoes of individual investors, the instruments are quite the same.
Okay.
Except that the strings attached to them are quite different. And if you want to look at rates of return, I think it's very interesting. Say in the initial years when green finance first come out, actually there's such a thing called the green premium.
Okay.
So in other words, actually investors get shortchanged a little bit because
Right.
there's lower rates of return because they
Understood.
pay a premium for the instrument, especially
it.
a bond.
Right.
But in the most recent past, when you invest in a certain asset class or an instrument, you're looking at the risk profile.
Yes.
When the risk profile go down, you can get more returns. That's also recently what happened is because of all the changes, number one in regulation, number two in technology, number three in consumer preferences,
Right.
the risk profile of some of the underlying assets can go down because if you are not green, you are subject to risk because of more stringent regulations coming out.
So that's another way of
Yes.
incentivizing the industry.
Yes, and regulations come out every other month
Yeah.
across the world, especially in the European Union.
Yes.
And of course in Asia and particularly Singapore as well.
Okay, interesting. So it's basically the same function. I do get my money back. It just may not be at the same rate as I would expect from my regular ETFs because of the greenium.
But now I think there's some parity, and going forward, I would say that you might be getting a better deal now
Okay.
because you are lowering your risk.
Right.
And I think another movement is investors also need to be responsible.
Yes.
Responsible investment is quite an in thing now.
It is.
And I have to say this, if you want to look at color of money, I think going forward, the color of money must be green.
Yeah, yeah. Well said. I mean, I couldn't have said it better myself. So this area of finance, it's still relatively new to many of us. And as you rightfully pointed out, it is still trending. Regulations change. A lot of things are evolving simultaneously. So what kind of investor will green finance or transition finance suit most?
To put it in one sentence, is for the investors who want their cake and eat it.
Why do you say that?
So in other words, you still have your requisite rates of return,
Sure.
your ROI, because you ultimately, whatever investment, by definition, is something where you need a certain payback to you, including a certain surplus.
Yes.
But the other side is, I think investors are also beginning to see that they play a role in moving society, moving even towards better protection of the environment. And I think if they can do it together with what they call the financial return, all the more is better.
Right.
And I think lately the various classes of green instruments are now living up to some of these promises.
Yes, I'm glad you brought that up. You're an expert in this field, so I wanted to get your observations on the industry. It's not entirely new. It's new to many of us, individuals, the average person. How has it performed? Has there been real impact from green finance and transition finance in meeting some of these climate change related goals that we keep talking about and hearing about in the news?
Yes, I think if you look at, say, green finance, it is actually not just being nascent now. It's actually turning the embryonic curve towards something that is developing quite fast. If you look at environmental-based finance. Another one which is actually not quite environment is a social link.
Yes.
But of course, these two can be lumped together. And then generally sustainability link. This part is, I think, quite well nurtured and they are actually keeping up with, I would say, the conventional finance. But the one that's still taking baby steps is really transition finance.
Yes.
And I think individual investors won't know what to do with them because they're actually very complicated. Yeah, funding, say, for example, entities, they are trying to move away from firing their energy generation from
and that's
coal.
hard.
Yes.
It's hard to do.
It's hard. So I think that the retail investors or individual investors need to get to the game. I think it's not too easy because understanding transition is actually more difficult than understanding the finance. So in transition finance, the key thing is really the transition, not so much the finance.
Right.
And upfront, you might actually take a little loss or even take a even higher carbon footprint in your portfolio. But going forward, I think you probably need to redeem yourself. So for this new class of transition finance, I would say let there be more awareness first before we actually dive deep into this new arena.
You talked about how complicated and challenging it can be. What are the aspects that actually make it so complicated?
I think basically is what are the aspects of transition.
Yes.
And in terms of not only just the substantive part, but more importantly, the measurement.
How do you quantify whether that transition has been successful or not, right?
Yeah, how do you know that they are in the right direction? And basically, many companies are quite lost going in that direction. But I think the comforting thing is even if they are lost, everybody is on the right direction.
Yeah,
So.
it's about that awareness, right? Taking that first step. So is there a good support system for these companies to be able to move into transition?
Yes, I think so far the focus has been on the financing side.
Right.
Institutional players like banks, the instruments available to the ordinary investors will be less. I would say going forward, the word transition might come out more in terms of individual options as well as portfolio. So
it's going to be a space to watch for sure. We want to know also, of course, about greenwashing, right? The irony is the word greenwashing has become a bit of a dirty word in the industry. There's a lot of noise to sift through. As an investor, I may not have the time to read a manifesto, to ask around, to verify, right, whether the investments I've made into these companies, that indeed it has ended up where I was promised it would end up, right? But I also don't want to hop on the bandwagon for the sake of it. How do I make sure that these investments I'm making in green or transition finance are legitimate, that they are going to end up where they are supposed to end up?
Well, I think this is actually a very, I would say, difficult issue, but to unpack it in simple terms, I think investors, particularly the smaller players, will need to, number one, be very sensible and reasonable what you can expect. Sometimes things are just too good to be true. Maybe just give you a personal example. I was buying some bathroom tissue.
Right.
And on the packaging, it say if you buy this tissue, it will contribute to, reduction of temperature to not more than 1.5 degrees Celsius.
I've seen those.
Aligned to Paris Agreement. I mean, in just a package of bathroom tissue.
Yes.
So there were two websites on this product.
Right.
So I went to the two websites. The first website that I typed in, double check many times, HTTP 404 not found.
Oh Oh my goodness.
Second website was found, and what happened was it was some dubious website. So I went one step forward to go into the company website to look for information.
Right.
And lo and behold, the company actually have all the necessary certification for paper products, all the respective standards, including the Singapore Green Labeling Scheme. Everything was put there, authentic. So the moral story is this: don't look at things at the face value. It's better for the individual investors to spend a little bit of time to do the homework. Some of the information may not be there at the surface, but with just a few minutes of little bit of homework, you will get that information.
Yeah. So just to wrap up here, Professor, generally, some parts of it is nascent, some part of it is not. But overall, to the average investor, it's still something that's newfangled, right? So why would I, as an individual, consider a sustainable or transition finance product in my investment portfolio? Is it for me? Is it for the generations I leave behind because I get more bang for my buck, both morally and in my wallet?
I think basically it's a bit of everything. And if I can just put it in one sentence, we are all looking at the green grass of home.
I love that song.
You need to have a good home for generations, yourself and future generations. But a home is just a home without a certain surrounding, the habitat they are in. We need the green grass to be beside the home so that we can live happily and harmoniously with ourselves and with nature.
Yeah, because that is also the source of our being. The green grass of home is the source of our being.
Yes.
Yeah, and we should take care of it. So, while it's new, it's unfamiliar, we have you to thank, Professor Loh, for bringing clarity to this often intimidating subject. I think I'm walking away feeling more informed about this area of finance. So you've been a big help to us. Thank you very much.
Thank you, Andrea.
So before we let you go, we have a segment. It's called Questions from a Hat.
Wow.
There are 5 questions in this hat. I will need you to pick one out, hand it over to me, and then I'll read it out for you. All right, so Professor Loh, your question is, what do you spend the most money on?
Wow. I'll say personal consumption.
Yeah.
Just to keep myself alive. So the regular food and drink, and I think it's very good.
So you enjoy that?
Enjoy
eating and drinking and having a good life?
From 0% alcohol, anything from 5 to 50% sometimes.
Yeah. Wow. Okay. Well, thank you for a little slice of your personal life, Professor. Glad to have you on the Money Talks podcast. It's been an absolute pleasure.
Thank you, Andrea.
And listener, we hope this episode has helped you make sense of this green area of finance, no pun intended. Got thoughts or questions? Well, send us a message and we'll get you the answer. Money Talks is streaming on Apple Podcasts and Spotify, plus YouTube Music as well. Don't forget to rate us if you are enjoying the podcast. Better yet, subscribe so you'll know when a new episode drops. My thanks to the team, Crispina Robert, Tiffany Ang, Junaini Johari, Joanne Chan, and Saya Wind. I'm Andrea Heng. Thank you for being with me here on the Money Talks podcast.